Good morning, everybody. Thank you for attending our seminar this morning. We are excited to have you with us and to share some of the information that we have for you today about financing programs for small businesses that are doing exporting. So Sarah, if you'll go to the next slide. I am the state director for the South Carolina Small Business Development Centers. We have 20 locations that you can see on the map here spread around the state. We serve all 46 counties, and we provide a wide range of services to any business that's considered by SBA as a small business. So not necessarily all that small, but just know that we are here to assist you. If you go to our website, which is www.scsbdc.com, and click on the locations tab. That will give you all the information on, it'll show you this map and all of the contact information to reach someone. So we're excited to be here with you today. Also with me are our 4 specialists who serve as export specialists, international trade specialists for the SBDC. So if you're looking for help specifically in the area of international trade, you would want to reach out to one of these 4 people. Beth Smith is here in the Midlands area. Tom Loria is in Charleston. Ben Smith is up in Clemson, and Jim Funk is in the Rock Hill area. So all of them are on with us today, and you'll have a chance at the end to ask our featured speaker, Dan Holt, as well as any of our export team questions at that point. And just to give you a real quick rundown on what we can do to help you specifically in the area of export. If you're somebody who's thinking about getting into exporting, or you're thinking about expanding into some new areas, one of the things we will do is sit down with you and really do a full assessment on whether this makes sense for you, whether the opportunities are going to fit with your strategic plan, and ultimately whether or not it's a good strategy for you to pursue or expand your export activities. Secondly, we provide a number of different types of training seminars and workshops. Obviously, we're still doing most everything online right now, but those involve several areas that you can see on the screen. We help you with the business management piece of doing international trade, the risks and opportunities, being able to assess those, understand them, and be able to address them. We help you with marketing, product branding and packaging, how to market to different parts of the world. We help you with international trade finance. So if you are looking to obtain financing to help you be able to pursue or expand your exporting services, we will help you learn payment methods. We'll help you find access to capital through a variety of different lenders, certainly including SBA. And just help you with credit insurance and anything else that relates to trade finance. We also will help you with supply chain, and that is certainly a piece that folks need to understand and know about as you get into international trade. It is a little bit of a different world, so be thinking about that. Certainly, as you get into export, it's a good idea to have an export business plan. That's something that you need anyway if you're going to pursue financing, but just separate from whatever your company's business plan is, it's good to have, excuse me, a targeted plan for exporting. And as I mentioned before, we do a lot of very in-depth work in helping you prepare a loan application, put the documentation together for a loan if you're applying for something. And then finally, we are part of the statewide and actually on a national level, the network of folks that are providing services to small businesses who are doing any kind of international trade. So just know that as you come to us, not only do you have access to our team of specialists throughout the SBDC here in South Carolina, but we also can connect you with other partners like the South Carolina Department of Commerce, the U.S. Commercial Service, the SBA, and many other partners that we work with here. So with that, what I would like to do is introduce our guest speaker today, Mr. Dan Holt. Dan is the Regional Export Finance Manager for the SBA and has been with them for many years, is a wealth of knowledge and just a tremendous partner to us. So looking forward to hearing from Dan. And with that, Dan, I will turn it over to you.
Thank you. Excuse me. Thank you. Good morning. And I'd like to start this with a commercial message. Next slide, please. One of the programs that's run in South Carolina is called the STEP Program. This is a program that is partially funded by the SBA, and it has certain requirements to make grants to U.S. businesses. Each state operates this program on their own. Next slide. And these are slides from the state of South Carolina. This gives you an idea. And if you look up in the upper right-hand corner, it says qualifying companies can receive up to $15,500 in reimbursement funds. The program, when it was put together, was designed to put people on an airplane and take them somewhere to make a sale and make it expensive. For instance, going to a trade show in Munich, Germany might cost 10 grand, and which may be out of reach for some small businesses. But if somebody reimbursed $6,000 of it, well, that would make it a little easier to go to. So that is available to you. And next slide. And to find out how to do it and how to get up with people, this is a map of South Carolina. And west of it, Anetta Patel, there's her phone number. On the gray, it's Nora Thigpen. However, the application for South Carolina is online. So it is not that hard. This is something that it's designed. You need your business cards in Mandarin. You need your website upgraded to it's in multiple languages. And I've got clients in both states that I cover, and they were not doing any business in Mexico. This year, after they had their website upgraded, they've done more in Mexico than they've done in the past 10 years. Because all of a sudden their website explains their program in Spanish in Mexico, and their products are not, their products go at $250,000 each. So being able to sell 10 or 12 of those in Mexico is a significant increase in sales. Next slide. That's the end of the commercial message. The Small Business Administration has a program to help exporters, and we are aimed at helping small exporters. And we have created 3 basic programs: the Export Working Capital, which is a line of credit, Export Express, and the International Trade Loan. Next slide. Now, before we get too deep into the programs, let's talk about what is an export, which is always confusing. It needs something. Basically, the top line, if you're shipping goods from the United States to its territory, that's an export. You're selling it to the U.S. military at an overseas base, that's not an export. Unless, of course, the U.S. military is buying the product to give to a NATO operation, for instance. Services, that's a major product for the United States, and I do a lot of service-based deals. You're an engineer and you're providing drilling consulting in East Africa. That would be something we could support. We're a consultant and you're handling a conference in the UK. That would be an export. You are a logistics company and you were providing logistics support to a Chinese company that's bringing in product. Your job is to take in a product and open up the container, pull the stuff out, repackage it, and distribute it for the Chinese. You're providing a service that's an export type product. So you're able to support that. Something that's not a U.S. Export is you're ordering a product, manufacturing it in China and shipping it to Japan. A drop shipment. That is not an export. We cannot support that. Next slide. Now, something for small people, indirect exports. You may not know that you're an exporter. You're selling to BMW. That is an indirect export. You're making parts for Boeing. There's lots of things you can be doing that are subsets of another company who does export. You're selling to somebody in Florida, and the guy in Florida, he gives you a purchase order. It says, I want you to load it in a 40-foot container and turn it over to a freight forwarder in Charleston. You don't even know who the buyer is. You don't care. You're getting paid from a US company. That is an export. And in some cases where it takes 60, 90 days to produce a product, well, this gives you the working capital to support that, because we will support that. And it's usually the proof of it being an export is in the invoice, the order, the contract, or the customer gives you a letter, say, yeah, I'm going to export it. That does it for us. Next slide. Now, something that often in the marketing stuff, it doesn't talk about eligibility. In the SBA loan manual, all 500 pages of it, 50 pages are nothing but talking about eligibility. Can we loan to you? And you have to be a small business. It's kind of in our name, Small Business Administration. Yes, you have to be a small business. And it's not as simple as we often say, well, gee, guy, less than 500 employees. Well, there are some companies that can have 1,500 employees. 500 is an average of what we have. So it's something that we look at as, are you eligible? Which is based on your North American Industrial Code. We actually have a little booklet that lists all the industrial codes and basically says what the size standard for that business is. And it's widely varied. So if you've got a question in your mind with their eligible, all you have to do is call me. I'd be glad to talk you through it. We also have an alternate size standard. If you have 600 employees, but your net worth less than 15 million and net profit less than 5, yes, you're a small business. So there are several layers. You have to work at it to be a big business. Also, to be eligible for the export programs, you have to be in business for at least 12 months, not necessarily export, but you've got to be in business. Or you have to have proven expertise. For example, your company, you just left your company. You're an export manager, you left and started your own operation. You've been an exporter for 25 years. So you've already got a book of business. You don't have a non-compete. You're ready to go. That is something that we would consider. We can grant you an exception. Now, the next thing, no US content. We're the only agency that does not have a US content requirement. You could accept Chinese products on the dock in Charleston, turn it around with a magic marker and write a new address on it and put it back on the boat. And that would be an export. We could support that. The reason it's in yellow is because it's subject to change. There are laws in Congress and people are talking about it. We may have one soon, but right now there is no content requirement. Everybody else, XM, Commerce, everybody has a content requirement of 51% US content. SBA does not. Secondly, military sales. Actually, that's a large part of my clientele, people selling parts to foreign militaries. We gave away a lot of C-130s over the years, and they need parts. The people who made the C-130s no longer make parts. So that's an opportunity for somebody. All the Hueys from Vietnam are floating around the world, and they need new doors and they need improved avionics. We would finance that. And there's other things. You can't be calling from jail. You cannot have a situation where you had a loss to the government, i.e. student loans. You defaulted on a student loan, you still owe the government money. Credit elsewhere. What that means is if you can get the credit without us, then you're not eligible because you don't need us. We are a need type thing. Next slide. Now, the Export Working Capital Program, the maximum amount is $5 million. And we offer the bank a 90% guarantee. And that is something you have to understand. All the SBA programs are bank driven. So we are offering the bank a 90% guarantee. And we're offering them a $4.5 million coverage on this, just like insurance. So that makes it a little more less risky for the bank and makes them more anxious to help. Now, these loans can be asset-based or transaction-based. It will cover lever. we don't have a ratio minimum like some agencies. You have to have a debt to worth of so-and-so. We do not have that. It can be a revolver, or it can be a single event. Somebody walks in and wants to buy something from you, and it's the only sale you're ever going to make internationally. And usually from time I get the application in the system, it's within 10 days we're ready to go. However, you should be aware that if a banker puts in a deal, and I look at it before I start talking paperwork and stuff, I'm going to give the banker an idea of what I'm going to do. It won't be 10 days before you know what we're going to do. You'll have a pretty good idea. Next slide. Two types of VWCP loans. One is transaction-based and one's asset-based. They don't get merged. I'm going to spend very little time on asset-based because that's a specialty program and very few banks are involved in it. Next slide. Transaction-based goods is specifically targeted for smaller businesses where you get a purchase order. And that purchase order, you don't have the money to do it. You got an order for $1 million, and that is more than your sales were last year. And your cost is $700,000. You don't have $700,000, and it's going to take 120 days for this item to go from scrap back converted to cash. This cash cycle is 120 days from the time you start. But you've got to make your payroll, you got to pay your raw materials, you got to pay rent. So this program is designed to provide you the working capital to do this. It can also be used for standby letters of credit. For example, somebody offers to pay cash in advance. And you're going, wow, that's cool. But it requires you to provide a standby letter of credit. It's a money back guarantee. And you go to the bank and say, yeah, I'd like to have one. And they say, no problem. Just deposit all the cash in and we will give you a standby. Standby letters of credit at a bank have to be 100% collateralized. We will get by with 20%. And we will allow the bank to issue that standby letter of credit or covering a performance bond. You may need just a performance bond to bid on something. You don't need it, but you got to have it. Now, if you're talking, sometimes if you're looking at foreign documentation, it'll come up and say, hey, we want a bank guarantee. And you're going, what is a bank guarantee? That's a standby letter of credit. In Europe, and around the world, it's called a bank guarantee. U.S. banks are not allowed to issue bank guarantees. Now, one thing that's on the transaction-based loan is we do have a controlled account required. A controlled account is where this deal that you had where you got $1 million sale, it's going to cost $700,000. $700,000 is your advance rate. It's because you're allowed to draw 100% of costs up to 90%. So you're in a position of not taking any money out of your pocket. So it doesn't draw money away from your domestic operations. And when it pays, when you ship and the account receivable is created and the money is paid, it goes directly to your bank by wire, and the bank tears off their $700,000 and gives you your $300,000. The bank gets first bite, in other words. And this is required on all EWCPs. Next slide. Now, transactions, there's multiple payment methods. And a transaction is what is evidence for transaction to the bank. You have a purchase order, you have documentary letters of credit, you have signed contract. There's a multitude of things that can create a purchase order or a transaction. However, how you get paid is limited. You can have cash in advance where they send you the money in advance and ask for a standby. A letter of credit, that's fully acceptable. Documentary collections, a lot of lumber guys use this is where they ship the product to the foreign port, but the bank holds the documents. So the buyer has to come in and buy the documents to pick up the order. That's used very commonly. Open account with a XM policy or private insurance, or open account, no insurance. I've got red asterisks there. There's a reason for that. Open account is for selling to regular customers that you've had. Usually we would expect you to have a history of book of business on this customer. You've been selling this guy for 2 years and he's paid you. We could consider that for an open account. Or the country you're going to is a relatively safe country. You call me up and say, gee, guys, I'd like to do an open account sale in 60 days to somebody I've never talked to before. And I got to met them over the internet, and I'd like to ship them stuff on a 60-day note open account. And it's the Congo. The answer is no. I'll save the trip. That ain't going to happen. I would require, at a minimum, a letter of credit. Now, export credit insurance, which the SBDC can help you with, is basically credit insurance on a foreign receivable. However, it doesn't kick in until you ship. Credit insurance is for invoices. My insurance, the loan, our guarantee covers the shipment from the day you get it till the day it's delivered. And XM is an insurance. And actually it becomes collateral on my loan also. We would take assignment of the insurance policy because generally the insurance is going to cover 90% of the invoice. Remember at the last slide we talked about we're advancing 70, or in that case $1 million, we advanced 700,000 up to 90%. So basically if you had a $700,000 cash need and your insurance is on $1 million, well, you would take a 10% haircut, but you would not lose that much. And plus you wouldn't owe the government $700,000. Next slide. Now, asset base is basically, if you're in business now and you have foreign receivables, in many cases, foreign receivables are excluded from your borrowing base. A borrowing base is nothing more than an accounting of your accounts receivable, and it's kind of a checkbook. You add up your receivables times whatever the advance rate is, and that's how much you have available to you. Well, foreign receivables are generally excluded from this. You get zero. With this, we would allow them to advance against the foreign receivable up to 90%. Actuality, most banks are only going to advance 70% and 50% on inventory, but they have the option of going to a higher rate. Now, we sometimes require standby letters of credit, uses performance. We will also look at the risk factor of the country you're going to and the length of time you're making the credit available to the foreign buyer. And that will determine whether or not we need credit insurance, letters of credit, or can we use open account. So it's a credit call at the case of this point of sale, and it will definitely change over time. Next slide. Now, these loans are not designed to be evergreen loans, that where you, like a credit card, you just have a balance, you pay on it that's not what this does. This is a self-liquidating loan. Everything that happens is supposed to pay the loan off. Everything is paying the loan off. It is not a long-term obligation. We're talking all the money is 60, 90 days. But the good side is, because this thing is supposed to move quickly, we're not taking a pint of blood, your brother, your sister, and your cousin, and one of your children. We're looking for a first lien on all the assets being financed, export inventory, work in progress, and accounts receivable, and take assignment of documentary letters of credit and credit insurance policies and other assets as required by the lender. Because sometimes a banker will ask for something else. That happens. We discourage banks from, say, taking real estate because that takes too long. What we're looking for is to move these quickly. Now, anybody who owns 20% or more of the company must personally guarantee the loan. No ifs and buts about it. All the personnel in the company that own 20% or more must be U.S. citizens or holders of green cards. That's something that is fairly new and can't be changed. That's the law. Next slide. When you call me and start talking to me, and I'm going to ask you what country you're exporting to, and you tell me the Congo. Well, the Congo is on the right-hand side, about a third of the way down, and they're rated D4. This is a credit rating of a country. This is from Euler. By the way, you can download this yourself. It's free. But I keep this on my desktop just when someone calls me and I can pull up and say, well, the country's a D, A, B, C, D, and D is the lowest. And the risk level 1, 2, 3, 4. Basically, if you look at the very first one, Afghanistan, before we left Afghanistan, they were a D4. That means it's a risky deal. I would require cash in advance on these guys, and I would make sure the money was printed on both sides when you got it. So there are others when you go down, like you go down to Argentina. Argentina right now is a C3. C3 means they're about one step over the line. So, and Argentina has funny laws about removing hard currency. Now, this is updated every quarter. And also there's they have a cool map on their website, which shows the major changes and shows you which places are risky and which are not. And you can download this into an Excel spreadsheet and sort it by country grade. And you'll be surprised how many people are A's and how many people are D's. But this is an important part of it because this assesses the buyer's risk, or excuse me, the seller's risk. How much risk are you taking? It's not on the customer himself. This is not a personal credit report. This is just telling you, in the view of credit people, how risky is this deal? So this is for real. I would definitely do it. And if you have trouble finding it, call me. I'll look it up for you. Next slide. Now, you do call me, and we're starting to talk about doing a deal. You're looking at the SAT questions I'm going to ask you. These are the questions you need to be able to answer to carry out a deal. What Incoterm are you shipping under? And if you don't know what an Incoterm is, you might want to find out before you call me. What country are you shipping to? That's back to the slide. Who's your freight forwarder? You go, well, why would we need to know that? Well, if you don't know who your freight forwarder is, how do you know what the price is? How do you quote a price? What are your sales terms? How are you being paid? Actually, I ought to put that first. I really want to know how you're being paid. And what's the relationship? Are you doing letters of credit? You're doing credit insurance, open account? What are you doing here? Did you use a pro forma invoice to quote prices? And that's more of a trick question. If you quoted a price, well, you had to know what your Incoterm was. You had to know what the freight was. You can't quote pro forma. And that's a very important thing. It's also a procedure. I teach a class on pro forma invoices. That's about an hour and a half to learn how to do that, but it's not hard. It's basically learning to lay out your cost. And so when you quote the price to the customer, there are no surprises. It's a communications tool. And by the way, most buyers, if they're going to their bank in a foreign country, will need this. They need a pro forma because they have to borrow money to pay you. And the bank they're going to is going to say, well, do you have a pro forma invoice from the seller? Or then you're going, well, no. Well, you can provide this. It's very easy. What is the source of the order? How'd you get this order? That's always a good indicator. Are we being scammed? How did the customer find you? One of the challenges for small businesses is, how did this customer find you? You're a small business in South Carolina, and somebody came along and made an offer. And you're going, wow, that's cool. Why? Usually, if you don't know the customer, you haven't visited with him, you didn't sanction it, there's a problem. There's a red flag right there. Unless you've invented fire or the wheel, and you're the only person that has that item, when the customer finds you, it's time to ask more questions. Why did this person want to buy $1 million item from you? And they want to pay with a credit card, and they want their freight forwarder to come pick it up. Right. That's called a scam. That is the most common scam in South Carolina, by the way. And I've actually had people get called on it. And the bad news is you didn't even know the credit card was stolen until after the plane took off. Who's your banker? Often I have people, well, I bank at a credit union. Well, I would check with your credit union and see if they can handle letters of credit, cash transfers, wires. Can they do that? If not, you're dealing in the wrong place. And also, they're not going to finance an international sale unless they take real estate. And what are the time limits on the process? You've got a deal. How fast does it have to take place? If the customer needs it that quickly, there's a good chance it's going to be very hard to get it financed because of the simple reason, the bank's got to get happy. They got loan committees, and then they have to, if they decide to use us or XM, somebody else has to review and do a credit analysis. So it's a very, very important issue to know what your time limits. Also, if it's a letter of credit involved, letters of credit are time sensitive. They're so sensitive that when I was being trained, the guy that would train me a long time ago, I might add, back before there were computers and all the neat stuff, he used poster board. And he was working at a large company, and he was our export manager, and he sold like 50 different places. And he would take the ship date on that letter of credit and put it up on a piece of poster board and hang it in the shipping department. And he had instructions. He told them that, dude, you missed this date, go ahead and clean out your locker because we can't afford you anymore. So ship dates are very important. Time is of the essence. Time is money. If you're borrowing $1 million and they're 3 days late paying you, that costs you $1,500 in interest. Oops, that was lunch for the next week. So time is of the essence in export sales, because if you're borrowing money, money has interest expense. And if you're my average loan is right now, I checked for the beginning of a fiscal year for the government. I was looking at it. My average loan is 2.75 million. So you need to have the opportunity to be able to do stuff, and time is of the essence. Next slide. Now, the second program we're going to talk about is the international trade loan. This is, we say it's a standard 7A loan. 7A, paragraph 7A of the Small Business Act. You can tell we're really good into marketing here. 7A lays out things. It gives you the standard fees, and that's about 3% on these loans. And the use of proceeds, though, is the same as any other program. You're buying facilities, you're repairing facility, you're buying equipment, you need some working capital, you're debt refinancing, or you're buying a business. That is new. That is new for this year. For the past 10 years, that was forbidden. Somebody decided in Washington that we should liberalize this and allow you to buy a business. If you are a small business and you're not exporting, or you export very little, and as part of the deal, you'll export more. For instance, you sell fish hooks, and you buy Harry's Lures, who has a distributor network in France. You buy his so you can piggyback your fish hooks on his lures, and you buy his company. That would be eligible under this program. Or you're buying a lumber company. Almost every lumber company is exporting. 80% of all the lumber manufactured in this country goes out the door, gets on a ship and goes somewhere. China buys our hardwood and our poplar. They're buying pine logs. All of this is going out the door. So all those are eligible if you were buying that kind of business. You're buying a business that allows you to export. That's the big thing. Now, one of the things that Michelle and Beth and everybody can help you with is your business plan, because we're really strict on this. This is about eligibility. We're offering the bank a higher guarantee. And because we're offering them a higher guarantee, we expect something. This is the carrot. We also carry a stick on this one. Next slide. This is long-term financing. We're offering the bank a 90% guarantee on, say, a $5 million loan, which works out to $4.5 million. Well, if you were getting a regular 7A loan, same paperwork, everything's the same, except it's a 7A loan, the maximum guarantee to the bank would be $3.75 million. With this program, we're giving the bank $4.5 million. This makes the bank more anxious because they're getting a better insurance policy. Everything that's on the 7A is the same. However, The loan proceeds will significantly export an existing export market or develop a new export market. And it has to have projections, names have to be named, and we expect this to be something. You can't borrow $5 million and your exports are going to increase 10,000. The loan amount has to reflect something about what's going to be the outcome. Next slide. You must submit an export business plan with both projections and a narrative that contains enough information. Michelle and Beth and all the other guys, they can help you write these. They can help you package these. This is something the bank doesn't have time to do, and you may not have it, particularly if you're an indirect exporter. So this shows what you're doing. Next slide. And the minimum of the plan should show your existing market, what you're doing now, and what are you targeting? Your targeted export market, your projected sales. Who are these people you're going to sell to? What countries? It can't be vague. It has to be very specific, and it has to talk about how this loan will help finance that activity. You know, gee, guys, I'm going to take the money, I'm going to buy a machine that punches metric holes, and because of that, I will increase my sales into the EU by 50%. Because I have these distributors, and we've got a dealer-distributor relationship that if I can furnish this product, they'll buy it. It's projections, but it has to show some kind of logic. It can't just be an academic say, yeah, if you give me the money, I'll export more. That won't work. Next slide. Example. You got $3 million in annual sales. You're requesting a $1 million loan to upgrade your plant and equipment, and it will support export sales that'll grow from 5,000 to 10,000 over the next 3 years. I used to have 3 slides that explained why that wasn't going to work. I decided to go with the short answer. No. Next slide. On the other hand, the business plan shows a need for specialized production equipment, metric standards in the UK and other EU markets. And you're getting money for an aggressive international marketing campaign to grow exports from 100,000 to 200,000 in 2 years, with projections of 350 export sales in the next 4 years. That would work. That's something we could do, because we're not so much looking at the percentage of total sales as how you're going to move the ball forward. And just moving it forward $1,000 for $1 million, no, that's not going to work. This would work. Next slide. Now, the last program is the Export Express. This is a small bank-driven program, next slide, that's been streamlined. SBA is not really involved in it. We don't pass on this. A bank that's doing this can actually do it in the same day. That's why it's called Express. We also have another program called Express, but it carries a 50% guarantee or 75, depending on the current regulations. And the COVID changed our minds on a lot of stuff. But most of the no fee stuff ended into September. What this is designed to do is handle deals that are smaller. I said my average loan was 2.75. Not everybody needs that much money. This is designed to handle people needing less than $500,000. On 350 or less, which is a small loan in these days, this is a small loan in today's world, then what we're doing is offering you an opportunity to borrow money, and it can be structured as a term loan or an export line of credit. You and the bank decide that. SBA doesn't even intervene. When the bank enters this into our computer system, when they hit return, they get a loan number. They don't get questions and answers. The bank is totally responsible for the analysis. They're responsible for doing all the work and dispersing the money. Next slide. And it can be done for a wide range of things, to buy real estate, equipment. Go to a trade show that takes place outside the US. You're going to a trade show that's going to cost $50,000 to haul everybody there. Yeah, you can take out your American Express and do that. and pay it in the same year, but that's eating into your working capital. And in many cases, when you go to a trade show and get everything going, it may take 18 months before that thing turns into cash. So you've got an opportunity here to spread out the payments. There's no prepayment penalty. So you can actually take that 50,000 and just owe 10,000 a year for the next 5 years. And if you make a big sale, you can pay off the loan and match up your assets and your liabilities. Working quarter, working capital for your export orders, contracts, or it can, and like I said, it can either be a term loan over 10 years, or it could be a working capital loan over 7 years, and then termed out over 3. It depends on what you're doing. It can also be done for doing LCs and bid performance bonds. So it offers you a wide range. It's a very flexible program, and what you negotiate is what you negotiate. Next slide. And the underwriting criteria. We don't screen these loans for anybody. The bank does everything. And banks basically saying reasonable assurance of repayment. They're going to use a reasonable credit analysis. That's what we're asking the bank to do, not us. We're not sitting down with a pencil and paper and an Excel spreadsheet and dividing everybody's numbers into something. So this is something the bank can do on in-house. So this reduces the speed of what it is designed for the small deal. I have seen people where they made the loan, they made other loans, and the guy's building needed to be expanded. And they'd already loaned the guy up 95%. And the addition was not going to add enough to the value to the building to make it happen. But the guy exports. So they used the Export Express to loan the guy $200,000 to put on the truck shed to cover his containers while he's loading them, and took a second mortgage. That's all they did. But there was not enough collateral there to really cover that loan. But with a 90% SBA guarantee, they were able to do that. So it does give you a benefit. Or you're one of these guys that just gets an order occasionally. Well, you borrow it one time, make the order, pay it off, and you go to the next one. Next slide. Maximum $500,000. We're offering the bank a 90% guarantee on a $350,000 loan. Anything over $350,000 is we give them a 75% guarantee. And by the way, this is subject to change. There's laws floating around in Congress now, but that hasn't happened yet. So we'll go with what we know and what's in the book. Next slide. The purpose of our programs is to provide working capital to exporters, and in various forms, but you need a bank. If you're talking to your bank and the bank says, well, gee, I never heard of these programs, give them my name and number and I'll call them. I'm still working from home. I haven't been in my office in 6 months. So it's a cell number, but I can be reached no matter what I'm doing. So if we ever get travel money and are allowed to travel, I will show up at the bank's office and I will train them in person. So this is part of my job. So this is something that we can make available to you. And if you need to talk about things like, gee, guys, my bank doesn't want to do this. And I go, why? Well, they don't do SBA loan. Well, that's good. We'll talk about another bank. Or the bank just needs help. Or not all banks can do lines of credit. There are some banks that do not do lines of credit. So we need to look for a bank that will do the line of credit and that you will fit in. And so I would get your financing down. If you're looking into doing exporting, I would get a banker. I would get your team together before everything happens. Get in and get a banker that's willing to help you. He also has the ability to negotiate letters of credit. He has the ability to accept wires, because money's going to flow here. So you need to be able to get the money, because even if the guy's paying you cash in advance, you want him to be able to get the money. Looking for you, and that does happen. It can cause you problems. Now, does anybody, I guess we can turn it back over to Michelle and see if there's any questions.
Thanks so much, Dan. Beth, are you going to run it from here in terms of fielding questions, or would you like me to do that?
Sorry, coming. Just undoing all the mutes and the videos and everything else. Dan, I cannot thank you enough for that overview of those 3 export financing programs. It's critical that our businesses know that that money can be used for a lot of different things other than just inventory in a box. And I think sometimes we get stuck there. You know, we see a package, we see a label on it, we see it being shipped, but we don't understand many other ways for us to utilize SBA financing to help our international trade. With that, I'd like to open it up, and Sarah, maybe you have to help me do this. How do we invite people to ask questions verbally? You don't have to put it in the chat box. You can just.
They can raise their hands and we can unmute them.
They can raise their hands. Okay.
Yeah, and they're welcome to put their questions in the chat box as well.
Don't all speak at once.
And Beth, did you have some questions?
I do, actually, because one of the things I get asked often, Dan, is what does the guarantee actually do for the borrower? You know, a lot of people are like, well, I see there's this guarantee, but Beth, does that mean that if I get stuck and something happens to the business and I'm not able to come up with whatever money to repay the loan, somebody else is just going to pay it for me? Could you explain the impact of the guarantee on the borrower?
Well, I'm going to be the finger in the eye guy and bring bad news. You borrow $1 million with a 90% guarantee and you default to the bank, and the bank asks us to honor the guarantee. We call that a purchase. That means we buy the note and the documents from the bank. That's how we would pay them off 90%. And then we take a sharp stick to you and beat you to death. I used to.
So does that mean they get the money for free?
No, it means that we're going to take a pint of blood out of them. I hate to be ugly about it, but we are a lender, and we are also taxpayers, and this is taxpayer money now. And I pay taxes too. So as a taxpayer, you should know we recover most of the money, and we pursue people for decades. I'm still chasing people down that I made loans to 20 years ago and collecting money. So we do collect most of the money we lend out. And yes, we do have charge-offs, but if you owe the federal government money, you have to remember that Social Security, you have a pension coming in, you may not get all of it. We will pursue this. Also, if you get tax returns, you know you're not getting a tax return anymore. You're not getting, because we will use just about every means to recover. And everybody thinks the government gives away money, and yeah, it happens, but we are really good at recovery. We've been doing this a long time. So you should be aware as a business person, there are risks involved, and the 90% guarantee is to protect the bank. It's not to protect you. That's why I recommend, even if you don't give us the collateral of the insurance, that you buy insurance on your receivables. Because that would, it's like, and by the way, y'all do this every day. When if you buy a house, the bank requires you to have insurance. You buy a car, you have to have insurance. Right. We're not requiring you in all cases to have this, but it might be a smart thing to do for a businessman to own it. And I have had people that I required insurance on that the customer didn't pay, and it was $750,000. And the guy he was going, man, I had to pay a lot for that insurance. I said, well, it saved me from having to move your stuff out of the house and put your stuff on the street. So insurance is important. Protecting your business is important, and doing things in a rational manner, because a lot of people go into exporting and for some reason they think there's some kind of a genie that's going to help them. And I'll get people call and say, well, I just got an order from the Congo. And bad example, but it did come from the Congo. And it said, what's my risk? And said, it's 100%. If you ship and the guy didn't pay you, what are you going to do? Go to the Congo and sue? There is no international lawsuit. Nothing of this, you're not protected. It's the Wild West. Americans are so used to being able to sue people and having the protection of the Uniform Commercial Code, they forget it's not available. After the water gets around your ankles, all the protections are gone. And the only thing you can do is to protect yourself by doing it correctly the first time. Having insurance, checking your customer out, getting credit reports, making sure what you're doing is not irrational. And if it's a first time sale in a foreign country, why are you granting credit? Because matter of fact, I use that example. Lady wanted to sell $500,000 of stuff to somebody she had never met in a foreign country. And I said, would you take the order from me for $500,000? You don't know me. You've never seen me. Would you ship me $500,000 worth of stuff? She said, no. Then why are you shipping it to somebody in a foreign country? Here, at least you can come chase me down. There, you can't even do that. So there's some reality checks people have to do. Don't do things you wouldn't do in your backyard.
Can we ask you, we have a second question that's come up in the chat box. And the question is, can you share an example of an unusual exporter that you've worked with in South Carolina? Because often clients don't think that their product or service is a candidate for export. And since you've seen everything that we've tried to finance, can you think of one that was a bit unusual?
Actually, everything I do is unusual. When you get to me, it's not, if it was something that was easy, somebody else would be doing it. I've done weapons dealers, people who sell weapons parts. If you ever in a magazine place, they always have the Soldier of Fortune magazine, and they have a guy on the cover, and he has this cool looking rifle hanging off a strap, and it's got all kinds of things hanging off, laser indicators. A lot of those are made in South Carolina. Those cool looking rifles were upgraded in South Carolina. I've handled that. I've handled a guy in South Carolina who was exporting fenders for Humvees to Turkey. Who could,
really, I get it.
The oddest thing, when I first started, I had a guy exporting jellyfish to Japan. If you ever go to Japan and go through the salad bar, there'll be these flat looking things on there, a little like tacos. Those are jellyfish. You might not want to put those on your salad, but they probably came from South Carolina. Fish is a big export up and down the coast. Oysters, weapons, specialty lumber. Lumber is a big export. The big things I don't get into too much, but cars I'm not into, but I've had guy exporting bulldozers, used bulldozers. That's the strange thing. They were broken. He got it at a good price, and he would actually take the replacement part and strap it into the bucket of the bulldozer, and they would drag it onto the ship. Because in South Africa, they could hire a diesel mechanic to put the transmission in for 50 cents. It was going to be $1,000 here. So he almost stole the bulldozer, paid $750 for a transmission, and shipped the whole thing to South Africa. So wine, beer, in Greenville, the export of the year, shipped a container of South Carolina beer to Sweden. And they loved it. He's still exporting. That was in Greenville, South Carolina. Because he called me up and he said, what do I do? Because he got the order and said, well, you call a freight forwarder and you load it. And make sure you don't use regular wooden pallets. You have to use export pallets. And the guy's still exporting. So we gave him an award. If you look at some of the websites, you might be able to find a picture where we gave the guy an award that year.
Oh my gosh.
So lots of things are going on. Anything that can be exported or can be exported. Hair care products. Minority-owned businesses making minority hair care products. Because a lot of the big companies got called on, they were shipping stuff to Canada, and they found out that, well, guess what? 25% of the population in Canada is minority, non-white. and they're all shipping things for blue-eyed people, and that's what their thought process was.
Mhm.
And this guy's up there selling complexion material. I'm a real good makeup person, by the way. Whatever the stuff you put on your face,
Makeup, that was close.
makeup of some kind
Yeah.
that was specifically geared to people's, that was toned into the right tone of skin. And they had a little chart. Had a lady that was making flight suits, the burn-proof flight suits. Well, it turns out the guys who fly helicopters get older and they get a gut.
Mm.
The ones that are made by the military don't allow a gut to hang in there. So this lady was making Nomex flight suits, custom make them to allow you to, and she had a chart you could order this over the internet that allow for excessive stomach.
That was, I mean, you just did a great job of giving us a wide variety of products that can be exported, and we never know where that next new market may be. I have a final question for you. The question is, what would you like for the SC SBDC team to do with small businesses to help you, to help you finance their needs?
Oddly,
What can we do to help you?
actually, it's doing the paperwork.
Mhm.
Because one of the resistances of banks to help small businesses is a banker. You have to understand what our customer base. You're a young banker. How are you being paid? You're being paid to produce loans and turn in profit. It's no different from any other sales organization. And you have to recognize that this guy's payroll and his and his ability to keep eating is based on the number of loans he produces. The first loan he makes to an exporter will not pay. Banks do not make money on the first deal. That just doesn't happen. They make their decision on what's going to happen on the second, third, fourth, and fifth. And as the business grows, can they expand their product? Can they sell you a payroll? They finance your cars. Oh, we got your payroll. We got all that stuff. It's based on selling additional things. But the initial loan, nah, they can't charge you enough to make any money. For this guy's making $50, $65 an hour, and you just spent 10 hours with him. Somehow he has to justify his existence. So getting some of the paperwork whacked out and explaining to the bank how this guy is gonna grow. Hey, this isn't a one-time deal. You're loaning the money for this one, and 2 months from now he'll be back and sell something else, and it will do this every 3 months. Because when I said the $5 million limit, that 5 million is not 5 million per year, it's 5 million per sale. So if you're taking $5 million and flipping it every 60 days, how many $1 million did you make this year?
Yeah, really.
And paying fees. Banks live on fees, and they're going to charge you for these. And too many people spend too much time worrying about interest rates. On short-term money, interest rates are irrelevant. You're not moving in and buying a house. You got a credit card. You pay 18% on your credit card and smile. The bank, it's not the interest rate that gets you, it's the fees. And banks are going to charge you fees. If you're having, if you can't expect the bank to help you if you're not willing to pay for the help. Too many people are trying to beat the bank out of everything. They think the bank gets their money from some magic place. They're taking a risk. The 90% guarantee we offer is an effort to remove the risk, so they will help you.
And
So
then
that's what the guarantee does.
Right. And then if we can assist the small businesses with getting their documentation together, that kind of smooths things out for the lenders, which also then smooths them out for you.
Filling out the package so the banker is not having to spend his time, that $65 an hour. He doesn't spend 4 hours, and he didn't have, when he goes to his boss in the credit committee, he has a better package. It's not just a bulk of paper. It's the forms, which aren't that hard, but it still takes time.
Right.
And the business plan. People not having a business plan that explains what the hell they're doing and how they plan to do more. That's very important. And it doesn't have to be that 40, 50 pages. An executive summary. where it just explains, hey, this is what I'm doing. This is how much it's going to cost. This is how much I need.
And these are the
That's very
countries.
important.
Mhm.
So the
And
bank
these
can
are-
just look at it and they don't have to read the 100 pages of imaginary words.
Dan, that's great information. I can't thank you enough for answering those questions. Sarah, are we about at our time limit?
Yep, you're good to end.
We are. Michelle, do you want to say anything to wrap this up?
And just again, everybody, thanks for attending. I hope this has been helpful for you today. We are so fortunate to have Dan, a great partner. He just does so much for the small business community and the international trade arena, and is a great partner for us. So, please don't hesitate to reach out to any of the folks from the SBDC on this call, and Dan provided his information as well, if we can offer, any assistance to you specifically in your area of need.
Dan, thank you again from all of us. Ben, Jim, Tom, and I appreciate all that you do, Michelle. And Sarah, you are the wizard behind the screen. Thank you for what you did today. Appreciate it. Thanks so much, everybody. Talk to you soon now. Bye-bye.
Thanks a lot.